Morning, Top Gun here, Friday, May 14th, a little after 5:30 a.m. in the morning. This is the YouTube pre-market commentary. Section 1, the Fed is buying stocks again. All right, on April 10th, I voiced my suspicion in a YouTube video, The World According to Top Gun, number 60, I believe. The Fed is buying stocks, and I'm pretty sure it happened again yesterday. Now, let's rewind. It's 11:50 a.m. on Friday, March 26th, and I'm short tech stocks and small caps, and I'm doing very well being short them. The market is on the verge of collapsing, and then all of a sudden, it finds a bottom and starts to rip, and I mean rip higher, with the NASDAQ going from breaking down to ripping higher 2% from 11:50 a.m. to the 1 p.m. West Coast close. Never forget it. So bizarre. Never seen anything like it in my 15 years professional career. Something similar happened again on Friday, April 9th. Steve Sosnick, chief market strategist at Interactive Brokers, pointed this out in this tweet that I've included again in this morning's blog post. And then yesterday, market was breaking down after being up big. The NASDAQ went red, and that was the cue, apparently, for the Fed to start firing its ammunition. And the market rallied about almost 1% in less than a half an hour from a position where you'd actually expect it to break down as it had lost all its steam and given up all its gains for the day. Okay, moving on. Disney earnings. So Disney reported earnings yesterday after close. Disney, of course, one of the most important stocks in the market, with a market cap of $326 billion as of yesterday's close. It's down a little over 4% in the pre-market. But they reported revenues down 13%, which consisted of media and entertainment up 1% and parks down 44%. Now, of course, the parks are still being hit by COVID, so media and entertainment was up a modest 1%. Now, they did manage to post a 32% increase in adjusted diluted EPS to 79 cents a share. Disney Plus added 8.7 million subscribers in the quarter to finish with 103.6 million. Now, of course, Disney Plus is still in growth mode, and Disney is focused on growing subscribers, all on Netflix, and not profitability at the moment. And therefore, the operating income for the direct-to-consumer segment, of which Disney Plus is a member, as well as ESPN Plus and Hulu, reported a $290 million operating loss. Okay, so if you look at the chart, Disney's now going to be about 15% below its March 8th closing high of 201.91. If these pre-market prices hold up, and we're going to be squarely between the 50 and 200-day moving average. So Disney stock is semi-breaking down, as were so many others. But after yesterday's, whatever it was, we'll see if that continues. So it didn't after March 26th. Have a great weekend. I'll see you next week.